It's about that time of day again. My name is Joseph. Wednesday evening, November 14th. Welcome back to your nightly newsletter. My job is to help new traders earn consistent profits using a simple and reliable trading strategy. And my plan this evening is to identify the most reliable trading opportunities setting up for tomorrow's trading session. And tonight, I'm covering crude oil, S&P, Nasdaq, gold, and euro. Starting off this evening, crude oil is bearish as it slowly makes its way back to yesterday's low. And my goal is to use the high of a new hidden channel for reliable selling opportunities tomorrow morning. The S&P is bearish, but trading at the low of the range isn't a great place to start selling. So my plan is to wait patiently for selling opportunities up at that range high instead of trying to force trades down near the lows. The Nasdaq is also bearish and also trading at the low of its range this evening. So I'm watching for a short-term buying opportunity on a short covering rally with the ultimate goal of buying the low and then selling the high of that range using buyer failures tomorrow morning. Don't forget the gold. Gold is bullish with a spike and channel higher here. That tells me to look for seller failures below that moving average for another leg higher tomorrow morning. And the euro is bullish with a spike in channel as well. And that tells me to respect the momentum of this market and wait for a two-try failure for buying opportunities off the lows. But we'll get a lot to talk about here tonight on the newsletter. We got some big news shaking these markets up today, which means we're looking for big opportunities in the follow through tomorrow. As always, I've got a great video newsletter in store for you guys and gals this evening. Plenty of opportunities setting up for Thursday's session. Before we jump into those charts though, I need to remind you guys, if you're watching me this evening on YouTube, you can find a detailed description of this entire trading strategy written out right here on my blog at sidewaysmarkets.com. I'll leave all the links in the description of this video. Also, if you have any questions about anything covered in this video tonight, please remember to post them in the comment section below. If you like what you see, please help support this channel by subscribing, and don't forget, when you do so, hit that bell icon so you get notified every time I post another video. And don't forget, if your goal is to become a consistently profitable trader, make sure you join our mailing list. It's right there on our blog at Sideways Markets. All I need is your name and your email address, and I'll shoot you an email every time we publish something new. Also, don't forget, right below the video tonight on our blog, you can download all the charts from tonight's video. My goal here tonight on this newsletter is to get us ready for tomorrow morning's trading session. We open up our trade room every morning at 8 o'clock Eastern time, but if you can't be there with me tomorrow, the next best thing is to grab all those charts and use them on your own tomorrow morning. And don't forget, if you have any questions, any concerns, any comments, you can always post those comments in the comment section below, or call that toll-free number, or use the live support tool in the upper right-hand corner of this website. All right, great to be back here with you guys and gals. Happy Wednesday to you all. Boy, it's a Wednesday that feels like a Tuesday. That holiday on Monday, right, always throws everything off. Speaking of throwing things off, tomorrow is a day where we're going to play catch up on all of the news that we missed on Monday with the Veterans Day holiday. Let's jump in and let's take a look at what the schedule looks like here for tomorrow. Tomorrow is ultimately where all the news is scheduled to be released tomorrow morning. We get the retail sales from Great Britain tomorrow at 4:30 Eastern time. That will definitely get those European markets moving overnight. And then, of course, we go into a slew of news tomorrow morning, 8:30 jobless claims and Philly Fed, retail sales, all packed into that 8:30 block. Jobless claims, not that big of a deal, but Philly Fed and retail sales, oh hell yeah, right? We've seen some big pullbacks in the housing market. We've seen a lot of inflation signals lately. So retail sales are definitely going to be a big market moving event tomorrow. So get there early, grab your popcorn, because there's probably going to be quite a show tomorrow morning, bright and early. And of course, don't forget, we'll be in our trade room 8 o'clock Eastern time, and we'll have a front row seat for that major news tomorrow morning. Now, also, as I mentioned earlier on in this week, Monday was a holiday, which means typically we see the weekly inventory report on Wednesdays. Well, that's pushed back 24 hours. We'll have that weekly inventory report tomorrow at 11 o'clock Eastern time, which in all honesty almost makes it a non-issue for us. I really wish they would leave it like this. I always always tell you guys about this every time we have this situation. I wish it was like this every week, every Thursday at 11 o'clock instead of every Wednesday at 10:30. But typically, though, every Wednesday morning, 10:30 Eastern Time, we get that weekly inventory report. It's not today, it's tomorrow, but at 11 o'clock Eastern Time. So it's pretty much right towards the end of that trading session for the U.S. morning session for crude oil traders. Don't forget, I always like to use a 15-minute cutoff around that news each week. So the news at 11 o'clock tomorrow morning, we're looking at 10:45 a.m. Eastern Time being our cutoff, right, for those crude oil traders, right? This is only oil that we're talking about here this evening. So just a quick recap here. Not a lot tomorrow in the overnight session. We got the retail sales from Great Britain at 4:30. All hell breaks loose tomorrow, though, at 8:30. You can see quite a bit of news piled on there at 8:30. They're going to play catch up from what they missed earlier on this week. And then again, we got that weekly inventory report at 11 o'clock for all you oil traders. And again, my goal tonight is to get these charts ready for us to trade together tomorrow in our trade room. So make sure you come out and join me bright and early tomorrow morning. We open up at 8 o'clock Eastern Time, and we're going to execute this strategy together. Now, speaking of strategy, let's jump to some charts here. We got a lot to cover here tonight. We got crude oil, S&P, Nasdaq, gold, and we'll wrap up tonight on the mighty euro. Crude is bearish and trying to retest yesterday's low. There was some headlines came out of OPEC overnight that talked about production cuts. We all know it's probably not going to happen, but they're not going to stop from trying to kind of gossip their way to get these prices higher. I think it's pretty clear, though. OPEC tried pretty hard in the overnight session. You can see that nice strong turn around 4 o'clock Eastern Time this morning. OPEC got the rumor mills really churning this morning, and it couldn't get anything going here that really was sustainable here to the upside today. So we're definitely bearish. We're focused on selling opportunities up at resistance levels. And I'll tell you, there really isn't that much to work with. We had this kind of lazy bull market as it went higher. We heard about OPEC about 4 a.m. Eastern Time this morning, talking about production freezes. They do this whenever there's a couple weeks of really bearish price action. You'll always hear about, oh, we're thinking about cutting production. Everyone, of course, freaks out, buys the market back up, or at least covers their short. But as you can see, though, this has definitely been short-lived. That momentum, of course, buyers try once, buyers try twice, and you can definitely start seeing that separation away from the moving average. One of the key components, one of the big ways that I like to use the moving average is when I start seeing price separate away from the moving average, right? See how the price jumps off the moving average when the market's bullish, right? You'll notice how the market couldn't get very far away from the moving average because the market was still bullish up there, but now we're starting to get some good separation away from that moving average. Definitely giving me the confidence now to start looking for, right, a selling opportunity up at resistance. So we're starting to separate away from that moving average. The bears, of course, in a bull market, they can't quite get away from it, but once it turns bearish, it jumps off of that moving average. So now that tells us that momentum now is ripe for the picking. The hard part now is we're very low on this chart right now. I don't want to sell very low. Nice and low, right? Momentum is definitely bearish now. I don't want to sell low, though. So now let's focus on finding some levels of resistance that we can use to focus on selling high. First of all, anytime I see a market reverse direction, I draw that trend line off of that low and I bring it back to that high, and that creates that hidden channel. So that hidden channel is definitely a level of resistance that I'm watching for here tomorrow. If we keep going lower, just so you know, if we keep going lower, we'll keep on adjusting that channel as well. So if it does keep going lower, we'll keep on, right, waiting for that pullback as well. I've also got some prior swings up at 53, 76, 86. Those will be key levels of resistance, right, up around the high of that channel. So not a lot to cover on this chart, but we know we're bearish. We want to sell at resistance. And so my plan really at this point is, with the goal of getting back down to that $55 a barrel, I want to get into something here quickly so I don't miss the chance here before the bottom drops out of this. So what I'm looking for is to go back up to retest the high of that channel. Now, when we go back up to retest the high of that channel, that will put us most likely now above that moving average. Once we get above the moving average, then we'll look for that buyer failure pattern, right? Let the buyers now try to come in and buy that pullback. Once they try to buy the pullback, then we know where their stops are, and we can look to sell into those stops as we go back lower. Now, I don't want to chase after the move as it goes lower. I want to now find resistance, mark up a new channel. I call this a hidden channel pullback pattern, right? So here we have a buyer failure pattern, right? Buyer failure above the moving average into that hidden channel pullback pattern. You know, I get a lot of questions every evening. I always appreciate you guys, right, posting your questions and sending me emails with questions. And one of the most common questions that I get is, how do you actually take these trades? You know, what is it? What specific entry patterns? What time frames are you using? This is a 5,000 tick chart on crude oil. This is going to require a lot of risk per trade. So what I like to do is I like to go down to like an 800 tick or a 1,000 tick chart on oil and then look for these entry patterns on that faster time frame. What I'm doing right now is just preparing for what is the overall scenario I'm looking for. I want to go up to the top of that channel. I want to see these buyers try to buy the pullback. I'm going to look for those buyers to fail, right, so I can sell into their stops. Then we'll go out, find that new hidden channel, and sell off the top of that hidden channel. Now, if you'd like to see all the patterns I use on the entry time frames that I use and get a much clearer picture of what these trades will look like tomorrow, I've got a ton of examples as part of my free trading course. So if you want to learn the strategy, if you want to learn the entry patterns, I'll drop the free trading class in the upper right-hand corner. I'll also put it right below the video tonight on our blog. If you're here on sidewaysmarkets.com on our blog, it's right below the video. There's a big red button there that says free trading course. So either grab that link that just popped up here on YouTube and grab the free course there, or just grab it in the description or below the video on our blog. That way you'll know more about the more precise time frames I'm going to use, the entry patterns I'll use. It'll be a great use of your time. So looking to go up, one try, look for those buyers trying to buy that pullback, right? Look for those buyers to fail, and back down we go. What else could happen here? What other scenarios do I want to look for here? Well, we may go sideways. We may go sideways. In fact, I'm kind of secretly thinking this may turn into a bit of a range tomorrow. We may see it turn a bit sideways because we had such a big move down. And again, as I mentioned before, anytime we see a big move in one direction, oftentimes the following day is a range. So I hope this isn't the case tomorrow, but we may end up, for example, going up, back down, and then kind of settling in here, right, into a range. So what if we do go sideways within a range here? Let's kind of put that plan together here if we can, right? So let's say we come lower here. We're going sideways, right? Trading range environment here. There'll be a bear bias to it. Anytime we have a bear bias with a trading range, I'll then look for that one try, two try failure pattern, right? That one try, two try. It'll look a lot like this up here, obviously different location, right? It'll look a lot like that up there though, right? We'll see it go up. We'll see those buyers try to break out once, they'll pull back, try again. Once we have that one, two tries for the bulls, then we can look for what I call a two-try failure pattern. Now, just some kind of words of caution on this. These come in all shapes and sizes. Sometimes they go one try, two try. Sometimes they go one try, two try, right? Opposite, right? And sometimes, right, they go up and very small two try. So I have a set of rules that I use to qualify those 2-try failure patterns. You can learn a whole lot more about those inside that free course in the upper right-hand corner, right? And again, don't forget, we'll go over more of that detail, right, tomorrow morning in our trade room, so you can make sure you join me there. Now, what if we keep going lower here? What if we keep grinding lower? If we keep grinding lower, really there's kind of two scenarios that you're thinking here. One would be if we just collapse, right? If we collapse, not much changes. I'm just going to adjust that channel, and then I'll look for a sell off the top of that revised channel. Same basic entry patterns, which you can learn in the free trading course, but just the channel becomes steeper. So that's something we're watching for here tomorrow as well. Another thing is this may simply turn into just a larger spike in channel. You'll notice how I've kind of shaved off, right, most of this channel to illustrate this, but if we just keep rolling lower, fine by me. I don't want to sell low. So what I will be looking for is keep marking up those swings. Let's get up, find that 1-try, 2-try, buyer failure, right, and then back down we go. So again, if we do keep rolling lower here, right, if we keep rolling lower, nothing changes. We're still going to look for, right, just as we have right now, we're still going to look for that move up, get up to the high of that hidden channel, get those buyers to try to buy that pullback, look to sell into their failure, and then again that hidden channel pullback, right, as we go. Now, what if I'm wrong about this, right? What if OPEC comes out again overnight and says, we weren't joking, we are locking in production, we're dropping production, price will jump higher? What would a bull market look like? First of all, how does it turn bullish? Well, let's go back in time here for a second, and let's look at this move down. At what point did this move really turn bullish? Well, we had a strong move down, and we call that nested 2-try failure. We talked about this last night on the newsletter. We had 1 try for the bears, 2 try for the bears, and really it was right here, right? It was right after that second attempt for those bears. That's when everybody got interested in being a buyer. It was just before, right, we started off our session this morning in our trade room, and price exploded, right, as it goes higher. So first of all, that's something we're definitely watching for here if we can get this market going higher. So for example, if we can see it once, right, twice now, hold above that moving average, yeah, all of a sudden now, that's a good opportunity here now. If we can get these sellers once, right, and twice, once we start seeing that nice big break higher, right, we'll know this market is now turning bullish. What I like to do is I like to wait for that jump off the moving average, and what I call a 1, 2, 3 reversal pattern. 1, 2, 3 reversal. Yes, you can wait for the 2-try failure, but what I find is always the easiest way to skin this cat is to wait for a strong move up, wait for a pullback to the moving average, and then wait for that jump off the moving average. Once we see that jump off the moving average, then we know this market is not a bear market any longer. I'm going to go out and find a new channel and focus on buying off the low of that channel. Okay, so if we do get that 1, 2, 3 reversal, 1 is that counter trend move, 2 is the pull back to the moving average, and 3 is that explosive move off the moving average that tells me sellers are out of the market, buyers are taking control, and at that point, we'll expect to see a big measured move here, which will likely put us up around that $60 a barrel level later in the day tomorrow. Don't forget, we're bearish right now. I can't even think about being a buyer until we turn bullish. I'm focused on selling up around the high of that channel. If we do keep going lower, I will wait to sell up around the highs, staying patient. But at the same time, knowing tomorrow is that weekly inventory report, time is ticking. 10:45 Eastern time is my cutoff tomorrow morning. And again, grab that free trading class, learn more about the specific entry patterns we'll be using tomorrow morning, and of course, right, be there with me at 8 o'clock Eastern time in our trade room. All right, S&P and Nasdaq coming in hot. S&P first. S&P is bearish with a trading range, a channel, and a measured move on the chart this evening. The bears obviously have momentum right now on the E-mini. That tells me to focus focus on selling opportunities at resistance levels overhead. But if you look closely, let me zoom out here for a second. There we go. If you look closely here right now, you can see we're sitting right on the edge of this range expansion, right? There's my trading range. We take that trading range, copy and paste it up, that creates resistance. Copy and paste it down, that creates support. And you can see we are really getting comfortable here down at that major support level at 26.96. This is the exact same level that we talked about in last night's newsletter. As expected, we went up to the high of the range, one try, two try, buyers failed, and price came collapsing back down. So now the market is obviously bearish. Sellers were eager to sell as the market popped higher. I see this now as a one try, two try, and so we are bearish, obviously, but I really can't sell here, right? So at this point now, I don't want to sell down at this support level, right? Because again, we're right at that range expansion level. So I might have a buying opportunity here with a short covering rally if we can get the right pattern going forward. So for the buyers right now, I'm looking for the sellers here to try once and try twice for a short covering rally going back up overhead. Hopefully we'll get some sort of trend line here to give us something we can work with. So as a buyer, I'm looking for the two try failure. We call these nested two tries. There's a bunch of different ways that we use two try patterns here at School of Trade. One of them we talked about last night on our newsletter called those nested two tries, right? I'll drop a link in the description here of this video right now. But the bottom line, though, is that would be what I'm looking for here, right, to be a buyer here tomorrow. I'd like to get this market kind of pulling back off of this low. Let those bears try once. Let them try twice. Again, there's a very specific set of rules that we use for this pattern. Let those bears try once. Let them try twice. And then once we see that second try for those sellers, we can then look for the appropriate entry signal, right, getting back up right into that trading range. Then, once we get back up to the high of that range, then we can start thinking about being a seller off of that high here tomorrow. So really, in the short term, it's buyers, one try, two try, seller failure for the move back up. Again, looking for that rising support trend line to piggyback off of that low. In the longer term, if we do end up back into this range, right? If we do end up back into this range, this will be one hell of a bull market. And so, of course, at that point, I'll be looking for targets up around these highs. This, of course, is the big target for tomorrow. And as we go higher here, if we do see the reversal, 1, 2 failure at that point now, right? We're looking again for that rising support trend line to buy off of that, right? Off of that support, or we can go up, mark up that new channel, mark up that prior swing, and now we know where our sweet spot is, and I'm looking to buy here as we go back up, right, to retest the high of that range. So it all starts with that 1, 2 try failure for the sellers into strength. Strength, of course, now I don't want to chase after it. I'm going to find that new channel and look to buy off the low of that channel as we go back up, right, to retest the high of that range. Once we get back to the top of that range, then I'll look to sell the top of that range. But because the market will be so bullish, by the time we get there, I'll have to wait for basically the same pattern we saw here. Strong move up and a nested 1, 2 try failure, right? So if we do see it 1, 2 run up, it'll be a strong move up into a 1, 2 nested 2 try failure, looking for that sell going back down into that trading range. That will definitely be later in the session tomorrow, so we'll see how this market looks as we get back to that high. I'm definitely not going to just blindly sell off that high because it will be such a bull momentum at that time. Now, another thing I'm looking at here is obviously we're bearish right now, so I want to think, what would it take for me now to want to sell this market? It would take another leg lower, right? I would have to see another leg lower, at the very least back down to retest that low. What I'd like to see, honestly, is I'd like to see us put a midline on this channel and then get that next leg lower, and then look for that sell off of that midline. Usually when a channel is really wide like this is kind of a wide channel. Usually if a channel is really wide like this, you'll usually have no problem using the midline of that channel. The problem again is we're right at this range expansion. So I would normally say we're going to sell here on that pullback, but we can't trust that. We have to wait for it to give us one more leg lower. That will give us proof now they're hunting for that measured move, and then we can look for that move now, either that failure pattern above the moving average or that pullback pattern, right? Again, I'll cover all of these specific entry patterns in that free trading course, which is linked up in the description. It's below the video on our blog. It's also right up top here on the YouTube video, right in that upper right-hand corner as well. So I got to see price go a little bit further lower here for me before I can start thinking about selling as we go lower. But if we do see some strength to the downside, I've got my eyes on that midline of this channel. And again, either a pullback, but probably going to be a two-try failure, right, to finish off that measured move, right, that buyer failure pattern to finish off, right, that measured move. Great example here of a chart. It's a bearish market, but right at the low of this range, I'm looking for that nested seller failure, right, that 1, 2 for that rally going higher. If we don't get it, if the market sits here and does nothing, I will sit here and do nothing as well. I can't sell into this low. I can't buy it without the pattern. So if we sit here tomorrow and go nowhere, I'll be sitting there right along with it. If we find ourselves, 9:30, 10 o'clock tomorrow, and we're sitting here still going sideways, then I'll start looking for the one try, two try failure, but that will have a lot to do with what the market personality looks like tomorrow morning. So if it does go sideways and the time keeps running, 8:30, 9 o'clock, 9:30, if we're still sitting there sideways tomorrow at 9:30, 9:45 Eastern time, I will then resort to, start looking for those one try, two try failure patterns. Let those buyers try once, let them try twice, and we'll try to sell back down to the channel low or back down to that range low. But for right now, though, that's going to be a little bit of a pipe dream here because we're right at the low of this range. I would need to see this market really start going sideways here and confirm a new range before we can start thinking about a one try, two try, right, and then back down again for that sell. All right, easy plan here on the S&P. Just got to wait a little bit longer here now for the proper entry pattern. How about some Nasdaq? Nasdaq is in a very similar situation as the S&P. We're bearish with a trading range and a measured move on this chart this evening. The bears definitely have the momentum right now on the NQ, so my plan is to focus on selling opportunities up at resistance levels tomorrow morning, preferably up at the high of this range, which is so conveniently placed up at the high of this wide channel, right? So the high of that channel is also right around the high of that range, up there around that 6,900. That is definitely an area of interest for those sellers. But again, in the short term, the sellers just completed that pendulum swing, right? We talked about this in last night's newsletter. We just completed that pendulum swing off the highs, and so I would imagine you're going to see some profit taking here for those bears and a possible short covering rally going back up to retest the highs. So again, as I mentioned on the S&P, because the market is so bearish, I can't just buy it. I do have a strong move down. There's one, another attempt, there's two, and at this point now, if we can see that nested one try, two try, right, focus on buying off of support, I can look for now that 1, 2, right, and be a buyer coming off of support as we go higher. Just remember though, don't get too greedy up here because you've got the top of that range coming in quickly as well as the top of that channel. So looking for buys here, short covering rally using the 1, 2 try failure, and then once we do get this market back up to retest the highs, really depending on how much momentum we get going higher. If it's a real strong momentum push like we saw back here earlier in today's session, I'll look for that nested two try, that 1, 2, and then back down. I'll wait for them now to try once, try twice before we sell it. So keep an eye out for that pattern tomorrow, right? As we go higher here, 1, 2, and then back down, almost identical to what we saw right in today's price action, right? You see these last two examples up here: strong move up, 1, 2, back down, strong move up, 1, 2, back down. There's no reason to think that tomorrow won't be much of the same. So really there are two main opportunities. One is that short covering rally using that nested 2-try failure. The other is up and then that 1, 2, back down we go using that 2-try failure pattern, because of course the market is a range. Now, what if we go lower here? What if we go lower here? First of all, if we're going to go lower here, we've got to really see a strong move lower here, right? It's going to show us some definite strength here because we're already sitting right at that range expansion level, right? So we're right at the range expansion. Not a great place to be selling down here. We just finished off that pendulum swing, like I said. So it's not surprising to see us sitting right at this area around 67.80, just because, again, we talked about this last night. We had that big swing up. We're expecting to see that swing back down. That's exactly what we got here this morning. So what do we need to go lower here? Strength. We're going to have to see this market really pushing lower. If we do see it go lower on strength, it'll probably end up being like a spike and channel. And you can see an example of what a spike and channel looks like right here. Anytime we see a spike and channel, what do we always look for? That nice strong move up. Yep, trap high, and that move back down again, right? Classic spike and channel pattern. Anytime we see a spike and channel, we always wait for that nice deep, right? That nice deep pullback and sell into those nice deep pullbacks. So tomorrow, if we get something similar tomorrow morning, if we see this thing continue here, right, and really roll lower tomorrow, I'm not going to chase after it. You don't want to chase after it. You want to wait for this market now to go up, right? Get that nice big move up. Let that thing come back, and we'll sell, right, as we go. Again, back up above a prior swing, nice deep pullback. So if it does keep going lower here, if we don't get a pullback right now, if it keeps going lower, not to worry. Just stay patient for that nice deep pullback as we go lower tomorrow morning. And then much like I said earlier on the S&P, if we do end up here kind of going sideways here tomorrow, right, I hope we don't, but if we do end up going sideways tomorrow, that will definitely put the kibosh on any buying opportunities here for us. We'll just focus on that 1, 2 failure pattern. Let those buyers, right, let those buyers try once, let those buyers try twice, able to fade that move back down. So if we do start seeing it, just, again, if it just kind of sits here and goes sideways tomorrow, we'll focus on selling into that second try. Just don't try to predict breakouts. That's a very unreliable strategy these days. 1, 2 tries, and then back down into that trading range. And again, if you want to see literally hundreds of examples of the actual entry patterns that we use to get into these trades in our trade room, grab that free trading class in the upper right-hand corner. It's also linked up in the description. My goal tonight is to just put the plan together here for us. And then again, tomorrow morning, we'll roll up those sleeves and we'll trade this plan with all of our members in the trade room. Let's keep going here. Let's keep going for the Nasdaq here. Over now to the gold. Gold is bullish with a strong spike and channel higher, or a strong spike higher, a hidden channel and a trading range on the chart this evening. The strong spike higher gives the bulls the momentum. That's pretty clear right now, telling me to look for buying opportunities at the low of this channel. And with price pulling back below the moving average right now, I can safely assume that the most reliable entry pattern is probably going to be a combination of a bear trap into a seller failure for a retest of the high. It would also be wise to prep for a possible collapse back into the range tomorrow, because technically this spike higher was only the first try for the buyers, and after a second try, we may see this momentum shift back to the bears, and we may make a run tomorrow morning all the way back down to that big round number, right? I mean, let's not forget, we've spent the last 36 hours pretty much just chopping around inside of this range. So it's definitely not too far-fetched here. It's not out of the picture for this market to try again and then fail and collapse back down into that trading range. So trading range is a big part of this plan here. The biggest part though is this big strong break higher. Anytime we see a strong move in one direction, we always know A, that gives the momentum now to the bulls, and B, we're likely to see those buyers try to get a retest of that high. Anytime we see a strong move in one direction, we know to look for that pullback, right? Buying at support and then a retest of that high, right? So the high, the retest of that high is the short-term objective. And what I'm looking for now is I'm just trying to find some support levels that I can use in combination with, right, the entry pattern. So for example, if I take these two highs, right, if I line up this high and this high, and that's just kind of the only thing I have to work with right now, I can't really draw the channel like that. That won't fit very well. So only option we have is to draw it like that, bringing off these lows, and boy, I'll tell you, that fits like a glove. That fits very well. So that tells me we're probably going to see some buyers coming in around the low of this hidden channel. At the same time, I'm marking up that 1210. I'm marking up that 1209. That area creates the battle zone, right? This area between the low of that channel, right, and that prior swing. So that's where I'm looking at major support. Once we get to support, then I want to look for an entry pattern. And this is where we can probably start to use this falling resistance trend line for what I call a two-legged pullback pattern. That would mean we're coming down one leg, two leg, and I'm going to try to use that trend line now, right, as a buy going higher, right? Use that actual trend line not as resistance, but use it as support for that rally higher. Now, you could also call this just a one try pull back to the moving average, two tries into a seller failure, right, into a hidden channel pullback. That will also work, right? So as we pull back, it's a trap into a seller failure, right? Trap into a seller failure, into a hidden channel pullback, and again, a retest of that high. So it's a trap below a prior swing. Again, combine it with the low of this channel, right? It's a trap low, right? It's a two-try failure. And of course, it's a hidden channel pullback pattern. And again, I'm just drawing this stuff up right now. But if you want to see real examples of these patterns on faster time frames and what they really look like, make sure you grab that free course I've been mentioning here. It's in the description. It's also in the upper right-hand corner of this video. So those are definitely two things we're watching here, or three different patterns, right? That'd be a trap into a failure, right, into that hidden channel pullback for that rally, right, going back up to retest the high. One thing you want to be aware of, though, is got to stay away from this area up here. Because if I was a seller, that's where I'd be looking to get in short, right? Looking for this now as what I call a crown reversal, right? A crown reversal pattern. Crown reversal patterns are relatively aggressive, right? Excuse me. But this is something you always want to be watching as a way to avoid getting in trouble for your longs, right? So I want to buy down here, right? I want to buy low here. The reason why I'm telling you this is be very careful buying up higher here, because as you can see, I've got that high, that lower high. There will be sellers waiting up above that 14.7. I call this a crown reversal pattern. It's one of my favorite reversals. I like to use this when the long-term trend is bearish, right? Short-term trend is bullish, right? So imagine now the long-term trend is bearish, right? We then see it up, up, and up, right? That type, and again, I call this a crown reversal, right? It's a strong move up, lower high, higher high, trap, right? And then back down again, right? So trading those crown patterns, going with the trend. This one not so much, because you can see the overall momentum is so obviously bullish. So for me right now, it's going to be a little bit aggressive to be selling into that, but just be aware that is where you can expect to see sellers waiting here. So if you do see a buy set up there, stay away from the buy side right there. What I'm looking for a sell side would be, that's a little bit aggressive for my liking. You can try to take that sell off the high. It's just not a very reliable trade because you're not bearish, right? It's still a bull market. What I'd like to see here right now is I want to see that same two-try failure, but now for the bulls. So imagine if you want to be a seller here now, one try, right? Two try here now, run back lower. If we get that one try, two try, once we see those buyers starting to fail, draw that new channel on, and we're focused on selling up around the high of that channel. This is going to be a bit tricky here on gold, right? Gold got a good spook here this afternoon. It could just collapse back down. If it does collapse back down, right, if this thing just keeps on kind of tumbling lower here, then it's time to be more aggressive, right? When we see we're not getting any pullbacks, if this thing just collapsed back down, I'm going to start getting more aggressive, and we'll look for those sells using traps above those prior swings. So quick recap here. Again, looking for a trap into a two-try, into a buyer pullback to go higher. Be very careful trying to buy inside of this no trade zone above 14.7. If you want to be a seller, you can try to get aggressive on this with a counter trend crown reversal off that high. Again, just be aware that we'll be on the more aggressive side. I like to look for that turn 1, 2 fail. Once we see the new failure, then I can find my new channel. I can sell off the top of that channel. It's a much more reliable pattern to the downside. And then don't forget, if we do just keep collapsing, right? Again, this whole thing could be just one big smoke show here, right? We could collapse lower. If we do collapse lower, collapsing with very shallow pullbacks, I'm going to find those prior swings and look to get short up above those prior swings, right? So if we do end up collapsing, I'm not going to take the bait and chase after it. It's easy to get stopped out when you chase after trades. It takes a lot more discipline to wait for those trades up around those highs. And again, all of these patterns that I'm talking about right now, we're going to wait tomorrow, see what we get, and we'll trade them together in our trade room. If you don't plan on being with me tomorrow in the trade room and you still want to learn all the great patterns, grab that free trading course. It's linked up in the description. All right, let's keep going. Gold now wrapping up here on the euro. The euro is a beautiful chart tonight. Euro is bullish with a spike in channel and a resistance trend line on the chart this evening. The bulls clearly have the momentum right now, so my focus is buying support levels tomorrow morning, and I've got my eye on the low of this bull channel. Which reminds me, this channel, you can see, is relatively wide, right? See how wide that channel is? Right? First of all, there's a lot of overlapping candles, right? In fact, if you just gave it a little bit of a nudge, that could be a range, right? It could be a range. So why do I mention this? Because anytime we have a flat channel, right, or a wide channel, this channel's not horribly flat, but it's really wide. And whenever we have a wide channel, what you want to remember is momentum. Wide channels always tell me that momentum will get building as it goes back and forth. Why is this important for you? Because as we go back down to the low of that channel now, it's not as simple as let's just buy the low of that channel. I need to absorb that market's momentum going lower. So what I'll do is I'll wait for those bears now to try and sell off that moving average. From there, it'll either be one of two scenarios. Either I'll see it hold at these lows and I can buy into their stops, or if they do push lower, then I know we're either going to turn bearish with a collapse, or I've got to then wait for it to go 1, 2, right, and look for that buy off of that nested two try. Right, so three basic opportunities here if the market pulls back here, which it should do. One is going to be definitely wait for the market to pull back to the low of that channel. Then, as we pull back to the moving average now, I'm going to wait and see what happens. Do we try to sell, and does this trend line hold as support? If that's the case, I'm going to buy right into those stops, a little quick scalp up to that falling resistance, and then try to hold that runner up to the high of that channel. Now, another thing to keep in mind, though, would be what if we jump off that moving average, right? What if we jump off that moving average? At that point, it's all going to be about momentum. For example, if we really roll lower here now, this market turns bearish. That momentum is way too bearish now. So now we'll mark up that low. We'll mark up that new channel. And you got it. We're going to sell off top of that channel with our target now going back to retest, right? What is basically last week's low, right? Just barely, right? Just barely. So we have that potential hidden channel if we get that strong move now off the moving average. Okay. Another thing to keep in mind would be if we go lower here now, right? But we don't just jump, right? We're not jumping off the moving average, right? We're not jumping off the moving average. We're just kind of pushing a little bit lower here. Then I'll wait for the 1 try, the 2 try. I'll look for that nested 2 try. Like I said, I use these 2 tries a lot in our trade room. They're great patterns. They're really easy to learn. I'm going to give you all the rules as a client of mine, and you can see examples of these 2 tries on that free trading class. 1 try, 2 try, and of course with the right signal candle here, we'll look for that buy going back higher here tomorrow morning. I'm also thinking too, this may turn sideways, right, in a bit of a range. So if we do see it start going sideways, there'll be a bull bias to it. Anytime we have a bull bias to a trading range, look to buy the low of that range. I want to see 1 try, pull back. I want to see 2 tries, and then back up we go from there. 1 try, 2 try, buying up from there, right? Again, if we go sideways, stay patient, wait for that 2 try failure pattern at the low of that trading range tomorrow morning. All right, guys, now we get a good plan. We know the plan if price stays bullish. We know the plan if price turns bearish. Now all we need is to let Father Time do his job, and we need a few more candlesticks to see what we get here for tomorrow morning. Now, speaking of tomorrow morning, don't forget we execute this strategy together every morning with all of our advanced members every morning at 8 o'clock Eastern Time. If you want to come join me tomorrow morning, grab the advanced course, get registered tonight, and be registered for tomorrow morning's 8 o'clock trading session. If you want a free pass, if you want to take your time, learn more about the strategy, get a great free trial right on the homepage of our website. You can grab that, redschooloftrade.com. I'll put all the links in the description of the video along with that free trading class in the upper right-hand corner on this YouTube channel. If you have any questions, don't forget you can always pick up the phone and call me anytime you have any questions. I also have live support here on the homepage if you guys need any help along the way. Boy, what a great week it's been so far. We get some more action coming tomorrow morning. I hope to see you there tomorrow morning, 8 o'clock Eastern Time in our trade room. If not, come back and see us again, same time, same place tomorrow night for our next edition of our nightly newsletter. As always, my name is Joseph. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos. Bye-bye for now.